Hey, it's Clay Trader, and this will be a video chart on ticker symbol TRTC. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like several days worth of time right there, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. I've been doing this analysis the past couple of days, and especially for those of you that watched yesterday's video, today there's really no other way to put it. Not a very good day at all for the bulls. Yesterday we talked a lot about that pink line there, the 200 period simple moving average, and how the price needed to stay at least within the range of it. But this movement here, and sure, the price did recover, but I mean, when the pink line's way up here and the price closed down there, in my opinion at least, that's just too far outside of the range. So it's a full-blown breakdown, and as far as I'm concerned, you know, the chart is now essentially reversing around, and the bears have taken back over control. Now, that doesn't mean that the bulls can never regain control again. I'm not saying that at all. I mean, the last time the price fell back below the pink line, you can see right here, you know, the bulls regained control in a very, you know, emphatic way. So I'm not saying that, you know, something like that's impossible. I'm just saying that as things stand right now, the bears are back in control because they've not only pushed below, you know, the 50 period simple moving average, now they've pushed below, you know, that overall long-term moving average, that 200 period. So, you know, that is definitely the sooner the price can get back above there, the better. But there's a near-term level of resistance, and, you know, that level comes into play right here and if you're watching level 2 today, I'm sure you noticed, but multiple times, bulls try to get back above the 45-cent range, a couple of times there, a couple times here, and just couldn't quite do it. So before you have any sort of, you know, discussions or talking about getting back up above that 200 period, first level of resistance that needs to be cleared is 45, and then actually with the rate at which that purple line is falling, the 50 period, you know, that'll be the next key level of resistance. So really 2 levels of resistance need to be broken before, you know, any discussions about that pink line take place. First level 45 cents, and then the next level, that purple line there, the 50 period simple moving average. Now, in regards to levels of support, there's really one main one where the bulls did do a good job, because, you know, if there's one level that you would really want to see the bulls hold, they did hold that level. And that level is down here at, what is that, 42 cents. That's the exact point where, you know, the price bottomed out last time, and good to see that once again it acted as support. So 42 cents, definitely that key level of support at this point in time. But we'll see what happens with it next week. Bears had a very good week. Bears are back in control, but maybe the bulls can take back over control next week. We shall see. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right here to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good weekend.